The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So, stock of the day is Woolies. Yeah, we're sticking with the supermarkets. Yesterday, of course, it was Coles releasing third quarter trading update. Woolies saying the market remains competitive and consumer outlook uncertain, notably in the clothing part of its business. Group sales increased 3.2% in the past quarter, about $17.3 billion, better than expected increase, with e-commerce sales in the food business jumping more than 15% from the previous corresponding period. However, it's W Living, which includes Big W and Petstocks, was a laggard for the group. Woolies also saying weather events such as Cyclone Alfred led to the additional cost of between 20 and 25 million due to higher stock losses. Woolies saying the average prices, excluding tobacco, actually declined by 0.5% over the year, marking the fifth consecutive quarter of lower prices for customers. Well, that's what customers want to hear. What do shareholders want to hear, though? David, what do you think?
It was slightly better than expectations, but a little bit below Coles' result announced yesterday. And I think that's probably a little bit of the sign of what we've seen over recent times, is that Coles seems to be outperforming Woolies. You mentioned the W Living division was, I suppose, the negative in the result. Their food business is going quite well, but Big W and their other smaller businesses aren't doing as well. So, look, it was an okay result. We've actually still got a buy on Woolies. I think it's okay value. The earnings expectations are that it should continue to grow into next year. So at current levels, it's reasonable. Probably not the most exciting stocks to be buying, but yeah, as I say, at current levels, it's not too bad.
Is your preference over Coles, or what are you doing with Coles?
Well, we've also got an accumulate on Coles. Personally, I probably would be leaning towards Coles, and I think it's probably performing better in the short term. Woolworths are going through a cost-cutting exercise. They obviously had those issues with their industrial disputes earlier in the year. So I think that Coles is probably a cleaner business at this point in time. So I'd be leaning a bit more towards them.
Yeah, and of course, David, we did see Woolies and Coles doing well when we saw that real market turmoil, of course, because they are defensive stocks. So you're not tempted perhaps to rotate out of these and find opportunities elsewhere?
Oh, not necessarily. And I think those defensive stocks are good to have in a portfolio, particularly in times of volatility. As you said, they're staple stocks, so we still need to eat. With prices starting to come down a little bit better, those inflationary impacts aren't as bad. So, yeah, I don't really think that there's a need to rotate out of them. But they're, I suppose, a good core stock to have in the portfolio to provide some long-term dividend yield and a bit of stability.
There we go. That is a buy and a hold for our stock of the day, Woolworths.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.